budget speech is done, the uncertainties are gone. Last night I was reminded by someone when I said, there's a lot of uncertainties and a lot of things we don't understand. And they said, well, what do you think the Americans feel like? So, okay, so we, at least we have less uncertainties. Okay, we are not building a wall separating us from our neighbors. In fact, we are looking at a more inclusive type of trade relationship, and we've got all these wonderful resources. So let's try to be positive about what the prospects are, even though we do not have the economic growth projected. But to discuss or to look at the budget, look at the economy, look at and the one thing I was very intrigued with was the minister's representation of essentially the revenue collection process, which is SARS, and kind of putting some focus onto that. And I saw that one of the newspapers this morning had it as their main headline as to SARS's inability to collect the revenue. Quite an interesting way of putting it, but and of course we have that conversation as well in what are taxpayer rights, what kind of collection processes moving forward. So without further ado, what I'd like to do is introduce our panel, and then as we go, the order will be that there will be presentations, opportunities for questions as we go along. Without further ado, our first panelist we have is Judge Dennis Davies. Now, I know you've had these little cards, and I'm not going to read out everyone's full CV because you've got a nice little representation there. What I do want to note, which I found quite interesting, last night I was actually looking at the CV, and it's interesting, when the judge started teaching at UCT, I was learning how to walk. So it gives you some indication, and I feel old because when I started in practice, it was the introduction of VAT. GST was kicked out and VAT was introduced. So, and I thought I was old, but the amount of experience that the judge must have over these amount of years is, well, it's an invaluable resource for our panel today. I think probably the most notable item on the CV for us to take account of today is, of course, his involvement in the the Davis Committee, and you would see that references right through the last few years has been on that. And one of the items I'm hoping that we'll touch on today is the controversial issue of VAT increase. And I know that the Davis Committee had presented its position in terms of that. So if I can ask Judge, if you could step forward. Our next panelist is Advocate Mkhawane. Of course, as I don't even think we need any great introduction, and of course that Eric is the Chief Executive Officer of the Office of the Tax Ombud. Now, as a tax practitioner, you would be, or even just a taxpayer, you would understand how important the role of a tax ombud actually is, and I'd welcome you forward so we can, and I do look forward to finding out some of the initiatives and changes forward in terms of taxpayer rights. If you'd like to step forward, please, Eric, and take a seat. And then our last panelist is Professor Jannie Rossouw. Now, he is the head of School of Economics and Business Science at Wits University. Now, whenever we have a conversation about the budget, of course, the economics of it is, well, probably more important than anything. Tax is how you collect the money, but how it is spent, how it affects the economy is essentially the role where the economists come in. So I really look forward to your input that you could bring to this. I think what is very important for us to note is not only the number of years that the professor's had in this subject, but also his dominant or prominence in various fields, such as being the Vice President of the Economic Society of South Africa, and also served on the Finance Committee of the South African Academy of Arts and Culture. He also chairs the Audit Committee of the Afrikaans Language Museum and Monument in Paarl. Quite a spectacular monument. I've been past there many times, and nice to see that those things are also being preserved. And last but definitely not least, I would like to introduce and call forward the Chief Executive of SAIPA Mr. Mkhawane Kaka. You know, I think as an organization, we have grown and have changed substantially the role that we play. I remember when I joined, and at that point it was still CFA, and as you know, it went CFA, CPA, and then it went to SAIPA as we know today. But right from the beginning when I joined, it was always, this is an institute for financial accountants, and then later professional accountants. Now that role's changed, hasn't it? We're no longer accountants and bookkeepers and auditors, and we've become critical parts of business and critical parts of business thinking and decision making that comes from it. And more importantly, from a tax point of view, is once the tax practitioner was recognized as how important a role they play, the professional bodies started being recognized as the controlling bodies for tax practitioners. So for this institute, one of the roles that we also have in tax is being a controlling body, and of course the stakeholder relationships that we have with SARS and Treasury and the other bodies in order to help our members and help the clients of our members who essentially drive the economy. If you'd like to come forward.
Good morning, ladies and gentlemen. First of all, I'd like to apologize for our late start. I'm one person who doesn't believe in punishing punctuality. But in the same way as we have been praying for these rains, they have come with challenges, and one of them is being stuck on the road. I don't know if, Etienne, you are my neighbor, because I also calculated 21 kilometers, which took me 1.5 hours. And I behaved like you. The first thing I did when I got here was to go to the loo. So I'm honored this morning to be here and share this annual breakfast event with you. I would like to welcome our esteemed experts who you have just introduced, you, our members, and those who aren't SAIPA members but will do so in the future. Before we get into all tax and budget discussions, I want to share a few exciting things that are on the horizon for SAIPA this year, and some events that we believe we should try and put on our calendars. The biggest event of this year, besides our expert-led budget breakfast, is the SAIPA National Conference, which will be taking place in Cape Town from the 19th to the 21st. This conference is one of our flagship events that we host every 5 years, with this being a highlight as we celebrate our 35 years anniversary. Booking for this will be open in the next few weeks, and I advise you to book early and take advantage of our early bird offer. Next is the annual National Accounting Olympiad. Each year we try to expand our reach into rural areas and play our part in really profiling and uplifting South Africa's education. If you know any of the schools in your areas who you feel should be participating, or your children's school, please give them the poster and pamphlets which our marketing team have put together. We received our accreditation with IFAC for another 2 years. This is an important accreditation for us as it shows SAIPA adheres to international standards and meets stringent measures. Our Project Achiever program was well attended last year, and we are seeing the fruits of our efforts with the results of the professional evaluation exams achieving 86% pass rate. To show how serious we are about extending our programs into rural areas and doing our part in educating students who are in remote locations, we have taken Project Achiever program online, and the results have been good. Last week I was told that about 300 students enrolled online. Now students can join program from anywhere in South Africa. Again, if you know anyone who would benefit from our program or looking into obtaining professional accountants designation, please get in touch. SAIPA strives to ensure we remain relevant to our market and members. One of our efforts to stay relevant is through our CPD program. Our members base continues to grow steadily, and we have seen a substantial increase in the number of members attending our CPD events. Thank you for all the support. Now, coming back to the budget, yesterday I spent a day at the budget speech. So it was the first time I met the judge. And he also had a conversation with me around the directions. So I hope I directed him to the right place. Because one of my challenges is directions. So I rely on technology to get me where I want to go. So I took few things from the speech, but I will not dwell into those things as we have brought in experts that will look into those things. So the first one was we were predicting that there will be VAT increase, but I think Judge Dennis Davis will be able to touch into that. But this morning I was listening to the speech by the Deputy Minister who said it's not off the cards. So they are still going to look into VAT. And he was also alluding to the fact that they are concerned about the negative effect it would have on the people we are trying to assist, mainly the poor. So there was also an issue of increase in tax for what they call rich, people who are earning over 1.5 million per year. And there's also a debate as to whether are they rich or are they mere middle class, but that I will leave to the experts. But what was interesting about life is that there was a lot of discomfort, which was suggesting to me that the people that were sitting there, most of them are sitting in that bracket. And it takes me back to my belief that people are not opposed to change, but they are opposed to being changed. So we welcome change, provided we don't have to change. So lastly, there was an issue of transformation, and I think you saw the ensuing debates around whether enough is being done 22 years into democracy around the issues of transformation. But on the other hand, the defense by the minister was that that is a factor that is highly dependent on revenue collection. But what I like is the fact that this morning when I was listening to the deputy minister, he said there are two factors that are linked to revenue collection. One is an improvement of tax administration, and he also alluded to the fact that over the past 2 months, they've been talking to SARS to strengthen their administration. The other one is economic growth. We know that we've not been experiencing good economic growth, and that has affected our ability to transform the economy. In conclusion, I would like to hand over to our panel of experts. Thank you for partnering with SAIPA for this breakfast so we can share knowledge and insight into what Praveen Gordhan released yesterday and help you plan your way forward into 2017. I thank you all.
I'd like to, obviously, in an event like this, one of the most important things that we have, other than the opportunity to network and to get some commentary, is also for us to engage in that conversation about what's next to come, what's in the economy. But in order for this to happen, we have to have sponsors as well. So I'd like to take the opportunity to thank our sponsor, SAGE. We have a sponsorship from Juters, which is 4 tax books that will be raffled towards the end, so don't run away. And we also have a media partner, Classic FM. So you can listen to Michael Avery's Classic Business Show. So let's get into the reason why we're here. I believe you're not catching a flight, but you're actually going to court.
I have a job, yeah.
His day job. So if I can hand over and ask for you to make your presentation.
Do you want me to speak from here? Or?
Please.
Oh, that's fine.
Have a comfortable seat, rather.
Oh, that's very good. Thank you. And thank you very much for inviting me. And it's a great pleasure to be with both Eric and Jannie on this panel. It seemed to me, I mean, obviously what I'm supposed to do is talk to you about the tax side of things. But let me just make a couple of contextual remarks, if I may, to start with. One of the joys about listening to people talk about the budget on the radio in South Africa is I often wonder, are they in the same country as I am? And in a way, I heard a series of, it's one of the advantages of being stuck in traffic is you can listen to the radio, but that puts your blood pressure up because the economic discourse in this country really ranges from the insane to the trivial, but never to the thoughtful. And here's the point. On the one hand, I heard the argument The budget actually does nothing in relation to radical transformation of the economy. It absolutely is a conservative budget. Treasury are an obstacle to transformation, radical transformation. What we need to do is take 400 billion rand out of the PIC over the next 3 years, stimulate the economy, and all will be well. That's the kind of economic theory, which is that what you get is an economic sugar rush for a couple of years, and then what that results in is fundamental economic diabetes for the rest of time. On the other hand, you get the argument, well, you know, why is he attacking the rich again? And therefore, you get the exactly opposite view. So let me just give some context here. I think that if one reads the budget review, and indeed the speech fairly carefully, what the minister was trying to say, I think, are two fundamental points. One, that you cannot have a transformation of the economy without some form of economic stability. But on the other hand, if we don't transform the economy, we won't have economic stability nor growth. And there's a lot in the proposals. When people say there's nothing in the proposals, there's a huge amount to suggest that this is the way forward. And he made a number of mentions of issues, which I'm sure Professor Rossouw will talk about far more than I will. But, I mean, there are problems of policy uncertainty. There are problems in relation to our education system. There are problems about our IT. There's problems about our infrastructure. In fact, there's even proposals in this particular budget how we actually turbocharge the township economy to ensure that the township economies are integrated so as to really affect transformation. Frankly, if we follow what he's saying here, in some ways, there's a lot to be said for the fact that he put things on the table. The second aspect, which is the one obviously I've been asked to talk about, which is within the context that you can't have a change to the economy without some sense of stability. And the real figure that I think one has to bear in mind as we go through the tax proposals is 162 billion rand. Because the 162 billion rand is what we pay on interest each and every year. It is the most significant figure of all. Consider that 160, we collect, give or take, 1.4 trillion. So 12 cents, in fact, we collect 1.2 trillion, and then there's about another couple of hundred billion that comes through various provincial security and other matters, which gets you to the 1.4. So if you take the 1.2 that comes out of the national budget, what you really are talking about is about roughly 13 cents in every rand we pay goes to interest. Just think, if we only had to pay 60 or 70 billion, we had another 100 billion to play with, how much more we could do. So the really critical question is, how do you actually curb this creeping interest component which is overshadowing every other element in the budget? And it was for that reason, more than any other, that you've got to, as it were, see the tax proposals within that context. Now, the real difficulty facing the minister was, as we all know from the medium-term budget speech, that the minister had to find 28 billion. It is significant that the underperformance on the revenue figures, and you mentioned that in relation to the Business Day's headline, on the budget to date was 30 billion. If you look at the drill down to that 30 billion, you will find there was an underperformance in the crucial areas of personal income tax as opposed to corporate tax, which actually exceeded budget, and in addition to VAT. The minister did say in the budget speech that obviously some of that is through an economic downturn. But there's no doubt that he was very careful in the language he used. He didn't say that was the exclusive and whole explanation for why we're 30 billion down the toilet. And that, therefore, I think was correctly interpreted, that clearly SARS failed in its job, at least in part, to get us to that 30 billion. And so there is, therefore, a debate that we have to have in relation to this particular question of tax administration, which I'm going to leave to Eric, but I just think you need to understand that that is the critical question. And that 30 billion underperformance, even if only a third or 25% of that is attributable to the inability of SARS to get the money that it's supposed to. And we all know that there have been very, very significant high-profile resignations and retirements from SARS, which is really problematic. Then you have to accept that there would have been either more money in play or less tax increases in certain areas. So this is an issue which is clearly an ongoing debate, and I think it's for that reason that the Business Day honed in on that, and we should know about that. Let me make one other question about this issue of tax. The model that a revenue service such as SARS adopts, by and large, can be broken up into the following. So if you take a population such as yourselves here, I don't mean disrespect to anybody, but roughly 85% of us, roughly, will comply with tax, come what may. Right? 80 to 85%. And frankly, they're not going to worry about your tax advice, they're just going to comply. Right? Then there's roughly between 15 to 20%. And those 15 to 20%, you probably half of them will never comply. Right? Not just in South Africa, in any country. Because you've got crooks right across the board, people who just don't want to pay tax and will not pay tax and will evade tax and will behave in any possible fashion. Then you've got another half who are the borderline, as it were. They may not. And it's that group, that probably 10% of the tax population, that tax administration is focused upon. Because if you get that group into the system, you actually increase your tax administration. If, on the other hand, your tax administration is lax, or alternatively, and this is equally important, that there's a lack of legitimacy in the system so that people actually don't want to pay more money, that 10% increases, and so does the underperformance. And it is therefore possible that if we continue in a country where corruption is rife, tax legitimacy declines, and if it declines, so do the collections. And I think we need to put that on the table. Institutional integrity is hugely dependent upon where the money goes. That having been said, so we all know how the minister got to his 28 billion. And let's just talk a little bit about that and some of the context in relation thereto. So obviously, we had a very narrow wriggle room to play with. Lots to talk about VAT. Yes, VAT has to go up. You can stand on your head about it. There is no doubt about it that whether it's the next year, 2018 or 2019, VAT has to go up for a series of reasons. We are not going to be able to have a national health insurance scheme unless we actually raise more money, and the only way we can raise more money is through VAT. VAT, give or take, gives you 15 to 16 billion a percent. 2% VAT increase this year, we would never increase anything else. Why did that not happen? There are at least 2 or 3 arguments, all of which you know. The first argument is obviously and manifestly the argument that VAT is retrogressive, which indeed is true. But here's the thing. The real form of redistribution comes on the expenditure side, not on the tax side. Not entirely, but to a large degree. If you took that 30 billion and you target it in the correct way, then indeed you can redistribute and alleviate the burdens on the poorer section of the community. Let me give you a simple example. If we took some of the zero ratings out, zero ratings are a very crude and untargeted basis by which to alleviate poor. And you say 2 billion rand or 3 billion rand by taking out the zero rating. And you then said, I'm going to use every single cent of that in the rural areas of South Africa, that every child will get a full meal once a day, paid on that money. That would be far more redistributive than ensuring that 10% of the zero rating goes to poor people and 90% we benefit from. So the answer, but why don't we do that? Because we're not sure that we can actually do that without that money going into somewhat more nefarious purposes. And that goes back to the question of institutional integrity. But we're going to have a debate, therefore, about that and how that ultimately is implemented. But the idea that it's off the table forever is clearly wrong. Of course, the second reason is a political reason. And I don't need to go into that. But clearly this budget took place, not to put too fine a point in it, in somewhat unusual circumstances. As the chairperson of the Tax Committee, I have already served with 3 ministers of finance. In fact, 4, if you think about it. Because we started off with Mr. Gordon, then I had Mr. Nene, then for 3 days I had Mr. Van Rooyen, and then back to Mr. Gordon. And clearly, one of the issues that clearly bedevils this budget and bedevils our country is the lack of policy certainty. You can't have economic growth if nobody knows whether next year or the year after the particular policies are going to remain coherent. It's vital, and it's vital for the vast majority. So that is clearly an issue, and there are a couple of issues that have been prefigured in the budget review and mentioned. Let me talk about them. There is a suggestion that fuel will now be brought into the VAT system in the year 2018. I heard a whole series of hysterical remarks on the radio about that. The answer is yes, the fuel levy will be reduced in order to deal with that. It's not a question of keeping the fuel levy where it is and then that. It's a question of a coherence of system. So you bring the petrol into the VAT system, and you've got to then have a commensurate reduction in the fuel levy pretty obviously. That's one. Secondly, so that's on the VAT side. On the income tax side, we had very little choice. If you aren't going to actually increase VAT, well, where are you going to get 28 billion from? Now, interestingly, this howl of protest about 41 to 45% affects, on the registered figures, 103,000 people in the country. That's all. I think it's underreported. I'm quite sure there are more than 103,000 people earning more than 1.5 million rand in this country. Take yourself a simple experiment. Drive from here down Sandton, Bryanston, etc., and look at all the houses. And you ask yourself, how is it possible for people to have those houses and 1.5 million? There must be many more millions in order to do that. So, and that goes back to the question of the tax administration and the question of whether we're bringing all high net worth individuals into the net. But we had very little choice on that, 41 to 45%. And quite frankly, the minister quoted Professor Anthony Atkinson, Sir Anthony Atkinson, a wonderful book on inequality, which is the real book that one should read rather than Piketty. I know everybody's got Piketty, but they use them as doorstops, not to read the thing, right? But the issue of inequality, Atkinson suggests that high maximum marginal rates, even up to 50%, are not necessarily the deterrents to the economy. I heard it said, I think some so-called economic, and we've got lots of so-called economic commentators. Here we have a proper economic commentator. But the point about it is that so-called economic commentators, people will leave the country. Well, I'd like to know how many people are going to leave the country exclusively because of a 4% increase in their tax rates. Go over to America and live under Mr. Trump, but be my guest. Right? Or go to some of the other countries where taxes are higher when you take it all into account. I don't accept that argument. And I want to make another point. It's about time that we understood the idea of what citizenship of South Africa means. Those of us who earn more need to pay more if we're going to have a level of social stability in South Africa. And one of the most important issues of the budget is that we run a tax and transfer system to poorer people which reduces the Gini coefficient, not maybe as much as it should. But certainly the World Bank, and indeed your own study, has suggested that that has brought the Gini down by more than most other countries. If we haven't got the money for tax and transfer, we're going to have more and more social instability. So the answer is, clearly that's an issue that has to be taken into account. Of course, certain issues were absent, and let me talk about them briefly. There was no mention made about a wealth tax, which is clearly still on the table and which we're still investigating. There was very little mention made, but in the budget, there's an oblique mention in the budget review about estate duty. No mention in the budget speech. What the budget review tells us are two things. One is that the attempt to curb the practice of selling assets on interest-free loans clearly was partly stopped by Section 7C, will in fact also be stopped by virtue of amendments to the Estate Duty Act 34A and 35B, if you wish to be technical, to ensure that, in fact, if you have interest-free loans in that particular kind, assets may be deemed to be yours. And thirdly, there are suggestions that the balance of the proposals on the Davis Tax Committee on estate duty will be considered for 2018. So clearly, we're going to have a choice, either higher estate duty, in other words, a more rigorous estate duty system, or a wealth tax going forward. That, I think, is clearly on the table. Two other issues. The minister made the point, and it's very difficult, I think, to disagree with that, that it would have been very difficult to actually get away with a higher company rate of tax. And the reason for that is clear. When you're in a competitive world like ours, if you start increasing corporate tax, you then find yourself being uncompetitive in relation to the rest of Africa, the UK and the USA. That too is a no-no. And so what we've therefore are faced with is actually a very narrow system going forward. We're going to probably find going forward a VAT increase. The 45% probably is here to stay for some while. The question of zero ratings, I think, are going to have to be debated in one way or another. And then let me make one other point. The budget review makes a lot of the question of base erosion and profit shifting. Now, it's interesting that about 7 years ago, SARS, when it had a really good transfer pricing unit, audited 40 companies, which it hadn't done previously, and collected 1.1 billion rand of additional income tax on the back of its transfer pricing audit. So there is clearly significant hemorrhaging in this regard that has to be plugged. Has to be plugged. And the answer is, if you don't do that, then you start to look for taxes in areas that you shouldn't be looking for them. Clearly, issues like the fuel levy are not necessarily progressive. And it always amuses me, the insanity of our economic debate, that we all kind of keep stum about the fuel levy going up, but God forbid that we should increase that. You know, it's like, hello, I mean, these are also indirect taxes. So let's kind of talk about this holistically. Let me make one other point before I end it here. One of the issues that the minister mentioned, which was some interest, is the question of the voluntary disclosure program, which is going to take its course, particularly during the year. As I understand the figures he gave, 3.8 billion rand has already been disclosed, an additional 600 million rand of tax has been recovered. I estimate that that is a very small amount of what will in fact flow in if we do the job properly. I would have thought that must be less than 10% of what one can expect. And that means that to a large degree, if all works well, we should get an extra 6, maybe even up to 7 billion additional rands in, which will actually be rather important in terms of the calculations that everybody jumps up and down about. Will you be able to meet target? The reason why I think that's going to happen is because increasingly, as the minister mentioned, SARS is now able to actually have exchange of information with an increasing number of revenue authorities around the world. Take the following instance. You go for a lifestyle audit. They audit you. So Mr. X is audited, and the audit makes no sense. SARS now will be able to write to revenue authorities around the world and say, have you got any information with regard to Mr. X, Mr. X's trusts that Mr. X may be indirectly or directly involved in, etc., etc. Now there's an obligation upon those revenue authorities to cooperate. So the idea of ducking and diving is going to become far less easy for those crooks in this country, and I use that word advisedly, who in fact have got vast sums of money that they're not disclosing for tax. It's not a scandal that everybody else has got to pay, and very, very wealthy people who secreted money out of the country and pay no tax on that. And so that issue is definitely one which you're going to have to watch very carefully. It's for that reason, more than any other, that both in Indonesia and in Argentina, where they've introduced in the last year amnesties of a similar kind to us, they've been vastly oversubscribed in terms of what could be expected. So the room for crookery is at least reducing, and if we get what I would expect, modestly, another few billion, that at least gives a cushion in relation to the question of trying to balance the books as they are. Broadly speaking, it seems to me that what this budget was extremely predictable, and that the real pressure points going forward are going to be debates about the wealth tax / estate duty, the issue of VAT, the issue of the revamping, of the question of strengthening of SARS capacity and attendant thereto, base erosion and profit shifting. Those are the key areas, it seems, that we're going to have to look at in the year going forward, and I'll leave it at that.
One of the things that intrigued me the most when I started in studying tax was a statement that I read by, it was a UK commentator on tax, and he made a statement that that's the price you pay for living in a civilized society. Without taxes, we would all be barbarians. And that was one of the most intriguing concepts, and we all have to pay our fair share in tax. The one question, before I open it up to questions from the floor, is when we look at VAT, we say, yeah, there's a regression there. My concern is, especially when you look at the zero rating and exemptions we currently have, is that there's a failure of understanding what the real basket of foods should be for persons at the lower end of the income scale. And I agree that should be revisited. But there, and you touched on it, that there is a cost of obviously getting the money back into, or the benefit back into the person's hands, and there's a diminished effect and a cost that comes with it. So when we take into account, is it still a possibility that we should be revisiting what that basket of food should be, or should we be totally eradicating that and focusing on just getting that money in targeted approaches back and kind of eradicate any of those exclusions we have for things like foods? And that's on the back of that. Just a few days ago, Zimbabwe announced that a zero rating would apply on certain food items like chicken, for the very reason of trying to alleviate the cost for most of the people on the population.
It's a great question. Let me just, it gives me an opportunity to clarify one other point about that. Clearly, zero rating is a very crude system. You talk about, when you introduced me, I kind of felt that I'd come out of Noah's Ark. Not quite that old. But I don't remember when Jan van Riebeeck came to the but what I can tell you is that I was part of the, shows you history, I was Kasatu's lawyer or advisor on many, many things, but I went with Jay Naidoo and Bernie van Rooff to negotiate with the then South African government about VAT. You may remember Kasatu didn't want VAT, the old government did. We argued there shouldn't be VAT at the time. Nobody knew anything about VAT with respect. The government and us used one book as a book by Alan Tate. It was like the Bible. And you'd say, well, he said this on page such, and etc. And during that time, the issue of zero ratings was debated hotly. And it was obvious to me then, and still remains obvious now, it's an incredibly crude tool. Because if you take chicken, so I accept, let's assume for the purpose of debate that poor people eat far more chicken than they'd say red meat, because it may be more affordable. But in fact, the vast majority of chicken is still consumed by people who can afford to buy the chicken. So the question is that the best way to develop poverty relief, or isn't it? In other words, if for example, chicken costs you, say, 100 in foregone revenue, but 80 of the 100 is going to people who can afford it, is the 20 that you're giving up the best way, right, of relieving the poor, or can we not use the whole 100 in a different fashion? That's the debate, and we've got to have that debate. Yeah. So I can also tell you that there was a serious debate, because I certainly had it with some members of the Treasury, as to whether, in fact, we shouldn't revisit the basket of zero ratings and see whether the ones that we couldn't get rid of, and then use the balance of the money in the kind of feeding scheme type or seriously redistributive targets that I suggested. So that is still ongoing. One other issue which I'd forgotten to mention, but your question triggered it. Of course, there's a lot of debate about why don't you then just have a luxury item, VAT item. So keep 14%, but shove it up to 17, 18% for all the fancy schmancy stuff. Well, the answer is that actually it's very inefficient. It creates a kind of arbitrage between VATs, and it creates a situation of administrative difficulty in actually getting the amount of VAT in. And the evidence suggests that if you have multiple VAT rates, your compliance gap increases. And the evidence suggests, and we've done the study at the Davis Tax Committee, we did a study commissioned by the World Bank. A gentleman came, a mathematician, who did the tax gap. I didn't understand a word he was saying because of all the algorithms. But at the end of the day, what he showed, much to my disappointment for an obvious reason, was that we have the lowest gap between effective and nominal VAT rates amongst any country. Why was it disappointing? Because I was hoping we'd have a bigger gap than I knew how to find the money. But there was no money to be found because the gap was so small. If we fiddle around with VAT rates, we probably have a greater compliance gap, and that actually therefore becomes counterproductive.
What I'd like to ask is if there's anyone with a question from the floor.
Thank you, Judge, for the wonderful talk. I just want to pick up on the introduction, even though it is for 2018, but the introduction of VAT on fuel. That don't you think that, because if you consider the number of liters that are pumped every year, don't you think that that is actually going to compensate for what even, I mean, a 1% VAT increase, if by just introducing VAT on fuel, that's actually going to close that gap because of the volumes of it. Although obviously there are the negative implications of it because it then affects everyone, right up to the poorest of the poor.
The answer is absolutely, it gives you roughly about it's equivalent to roughly a 1% VAT increase. You did right. I think they talk about 16 billion on that. But the problem is you can't just have that and add that to the fuel levy as it presently exists. Because, so you're going to lose some on that, because otherwise the price goes higher and you really are then, in a sense, I think, being in punitive territory. So Treasury recognizes that it's going to have to do something in relation to the fuel levy. It may well be that all it does is keep the fuel levy as is and add the VAT, but I suspect it may have to do a bit more than just that. So you're probably not going to get quite the 1% gap, 1%, but you will get additional revenue in, absolutely. And again, the question then will arise, what do you do with it? Yeah.
Thank you. Next question.
Just regarding the 7C on the trusts, there was just something that got brought to my attention when it's sort of extending down to loans from companies as well. So say, for instance, the person invests into the company and then the company has the loan with the trust. What's the actual, why are they extending it through that way? Because now, say for instance, I'm an individual investing into a company. I don't really have control of what that company is doing when they invest in or give the loan to the trust.
Are you talking you don't have it in form or in substance? Because what I think is being suggested is the crude avoidance, whereby you simply say, oh, well, the company will lend the money, when I basically de facto at least control both the company and the trust, probably could be dealt with under Section 80 capital anyway, because it's tax avoidance. But clearly, it'd be easy just to plug that gap. If it's a genuine arm's length set of transactions, then the answer is not. But what's the company doing giving you the interest-free land? I don't know if there's companies which are arm's length from me giving me interest-free loans. So the answer is that if it's a crude avoidance mechanism, it clearly is. And by the way, I think that illustrates a real point, which is if you're going to give people tax advice, for goodness sake, give them advice that's not so damn crude. It's obviously going to be hit one way or another. I was in the tax advising game, and I perfectly understand that this is a game between SARS and taxpayers. But really, when I looked at that, and when it was brought to my attention, I thought, oh, you can't be serious if you're advising your clients on that basis. I mean, that really is susceptible to an avoidance mechanism. And all it's doing now is just clearing that gap, where in fact it's clearly an interest-free loan, which in a sense, in substance, would have been given by the trust and now by the company. Other than that, if there's any arm's length part of it, it's not going to be part of the act.
Good morning, Judge.
Morning.
I just want to get your view on ETI. Do you think it has delivered accordingly, contributed significantly towards unemployment reduction? Should it be scrapped or continued?
ETI being?
Employment tax incentive.
Oh, sorry, yes. I think, the answer is I can't be sure about that, but it gives me an opportunity to say something about that, which is important to your question. Thank you. The World Bank, as you know, did a study on incentives in general. And the argument was that in general, incentives actually are all wrongly targeted. So in brief, many of our incentives are targeted at the mining sector, which is clearly declining, and what you should be doing for employment purposes, which is why it's relevant to your question, is targeting the incentives for manufacturing and agriculture, where there's a greater uptake, even tourism, where there's a greater uptake in employment. And so their argument was that the presently conceived incentives were actually all wrong. They were incongruent with the National Development Plan. They were incongruent with objectives of actually employment creation. And we now doing exactly that study. So if you take those employment incentives, which we're looking at, the argument that we're trying to work out is how many jobs are created for the money that you've foregone, and is that the best way to use the money? And thank you for asking that, because that is part of our ongoing work in terms of the tax committee, is to follow up on the World Bank. What's I'm saying? By next year, I'll be able to give you an absolutely clear answer on that. I should say this. There is some indication in the budget review of the cost of what we call tax expenditures, meaning the incentive scheme, how much it costs. What we don't know, and it hasn't been done since the Katz Commission, and I remember writing that part of the Katz Commission's report, was we needed to actually know how much money, how much benefit are we getting for the foregone tax on incentives, and we don't know. So the argument is that's totally under review at present. And just to finalize the point, what we're also, so because people may ask, well, what are we doing in future? It's corporate tax, it's incentives, it's the wealth tax, and it's tax administration that are still the areas outstanding in terms of our an oil and gas report. Those are the issues that are outstanding from our committee, and we hope to finish by the end of the year. But that certainly issue has to be quantified far better. So in answer to you, does it work? I don't know. The evidence is no. The prima facie evidence is no, but we don't have enough concrete picture to be able to give you the answer that I think you deserve, and which we don't have.
Thank you.
Sure.
I'd like to
thank you very much.
give you this gift to say.
Do I have to disclose this to you? I suppose I do. Yeah.
You'll have to.
Okay, I'm sorry you have to go. Thank you, Eric.
Thank you. Thank you for making the time. We get to wait a bit longer before we go back to our normal jobs. So it is, I think, in terms of my order here, it is for me to hand over to Eric to explain from the tax ombud side, their role, how they see the changing role of the ombud in aiding this concept of fairer and better tax administration. We've heard interesting comment, and I fully agree that from a tax compliance point, or a tax, just as a tax, I would say, basic concept of people wanting to pay their taxes, there are two key things. One, we must make it as easy as possible for the 80 or 85% who want to comply to be able to do so efficiently and effectively, and then the people who are not so compliant, an effective way of how to address those. So most of you are familiar with e-filing and the processes, but we all know as well that the tax legislation, or the Tax Administrations Act, is very geared towards giving authority and power to SARS because they need those in order to, well, collect tax. So our great line of defense, when the internal mechanisms of dispute from administrative part doesn't work, we then look to the tax ombuds office to give us some assistance. And we've seen some wonderful results from there. One question I'm hoping you're going to address is the client charter that we were promised last year already. In fact, by the Commissioner, he promised that it would be out before Christmas, which we, last I saw, we still don't have. So hoping you'll address on that. And let me hand over to you.
When we got into office, when the office was established, unfortunately, one of those situations is that the act is passed and then the office is formed. So we are a creature of the statute. So when we got in, we had to look at what does this act really say? How does it give, is it giving us enough power? What are some of the shortcomings? What are the various things that we can look at to improve? So unfortunately, or maybe let me say fortunately, we were able to bring in some input. The judge and I in the office, we looked at the act itself and just to look at what are some of the challenges with the act. And so in some instances, we had, in fact, when we started this process last year, we were given about a week. We had a week to provide input into the legislation. So within that period, we had to come up with the very things that we thought compromised our independence. The first one was, maybe even before getting to the independence, was just to look at the term of the ombud. It says 3 years. 3 years, you barely blink and it's gone. You cannot implement anything within 3 years. So to bring this office in line with other jurisdictions and the like, local ombuds and international ombuds, we propose that the term be changed from 3 years to 5 years. Other jurisdictions have actually longer periods. There's Americans, for example, they don't have a fixed term. It's just ongoing. And that the taxpayer, national taxpayer advocate there has been in office for 14 years. And here we had 3 years. So we thought this is really, it won't work. So we had to deal with that. So that term has been changed. And secondly, it was the issue of the appointment of staff. Now, the previous act was just amazing. It just said, you know, the staff shall be appointed in terms of the SARS Act and then be seconded to the tax ombud at the request of the tax ombud in consultation with the commissioner. So, I mean, that was really compromising. How can you have somebody determine who's going to scrutinize him? At the end of the day, in consultation meant there must be an agreement between the ombud and the commissioner. So we had that scrapped out. So there's no need to consult. We're not saying there was any bad things coming from the commissioner declining any of the appointments that we were making. No, it didn't happen. But we cannot depend on the goodwill of the commissioner. Another commissioner may come and may say, we don't agree with this. I don't want this person appointed, so it will really be a problem. So that we got rid of with effect from 19th of January, you know, with the new amendments. We are able to, we don't need to consult with the commissioner in any way. So we appoint our own staff in the way we like. The other thing was the funding. The previous act said it shall be in, the funding shall come out of the funds of SARS. Equally, how can you have the person you are scrutinizing being the one who's funding? It is, you know, it's like going to a guy and say, no, you know, I want to rob you, but hold my knife, you know, as a so that we dealt with. So the funding is determined by the minister. The budget comes from the minister. After all, we are accountable to him and not to SARS. So we dealt with that aspect. Now, the other issue, which is if you have a look at our legislation, it comes from Canada. We imported almost all of it. But there was one aspect which was not imported, which was the ability to initiate investigations. It was not built in our legislation. We made a proposal, we said it must be there. It is there. Now, there was a whole debate that, there are a lot of bodies that are looking at SARS. We have the AG and the like, so when they came up with the concept of the ombud, it was to just make sure that you have somebody sort of outside to look at, these problems, if they are complaints. But it was not to give it sufficient power and teeth. So now we are able to initiate the investigations. And this is where I'm going to stress, as practitioners, this is where you play a role. Your frustrations should no longer be only discussed in those forums where SARS and the practitioners are getting together. If you identify any systemic issue, or you pick up from your clients, this is where to go. This is the forum that you can use. You can use the Office of the Tax Ombud. Now, internationally, this is what happens. Practitioners always go to the Ombud. They give them tips. This is the frustration. This is the current trend, and this is the like. It doesn't mean that we are on our own will not pick up, but we will pick up. Previously, other people could not even complain at times because they were scared that they might be victimized. So that change in the legislation is bringing about some good news in the sense that even without a complaint, we'll get in and investigate. So that is something that is brilliant. It's Section 16(1)(b) of the Tax Administration Act. So the good thing is that we look at how SARS is applying the legislation. Are they following the right procedure when they deal with taxpayers? Are they providing the correct service? Are they serving you correctly? When you make representations to them, are they applying their minds to that? So that is a lot deeper, and that is a wider mandate than we had before. So that will enable us to go in. Currently, there's a problem with the refunds. And that kind of issue is something that we can zoom in out of our own initiative and look at the figures and ask SARS to provide us with figures and so that we can make recommendations at the end of the day and how they can deal with certain things. Some of the things that we're picking up currently, they are problematic. When it comes to the refunds, I'll just touch on that briefly, but because, people will be told, come to the office, to the branch, verify yourself, bring documents, do X, Y, Z, and the like. You go in, you provide the documents, you comply with all the requests, and they say, we are happy. Then the refund is not released. 21 days go by, 42 days go by, some people 2 months, 3 months. So we're receiving a lot of those kind of complaints, and we went back and said, SARS, look, you are frustrating taxpayers. What are the issues? We made a couple of recommendations in that regard. One of them being, it was the issue with the stopper. And some of the officials will be bold enough and tell you, as a taxpayer, we don't have a turnaround time for lifting of the stopper. Okay, so it means I must just be patient. And there's no turnaround. You can't do that. I mean, service. Once I've complied with all the requirements, you have no legal basis for withholding the money further. So please release the refund. So there's some of the things that we've been dealing with, addressing with SARS. And but in a nutshell, we'll be able to investigate deeper into this kind of problems with with the new changes. Now, the other thing which is always thorny, it was the recommendations which are not binding. Now, with that is weakness, but there are pros and cons of having a binding recommendation. Now, the legislation said they are not binding on the taxpayer or SARS. So imagine as a taxpayer, you lodge a complaint, and then you are hoping that it will go your way. So it goes against you. Now you're bound now, suddenly. Because if it's binding on SARS, you must also consider that it must be binding on the taxpayer as well. So it depends on which way it goes. So if it goes binding on SARS, we prefer that it must be, if it goes against SARS, it must be binding on them. But if it goes against me as a taxpayer, then I should not be bound. I must be left to go and look at the avenues and things like that. So there are pros and cons. But what we did was to make it obligatory for SARS to provide reasons where they disagree. And it must not just be quiet. It must not be, there are timelines. They must respond within 30 days of receiving our recommendations, explaining why they are not implementing. And even the taxpayer, if they don't agree, they may just need to come to us and tell us this is why they are not agreeing and the like. But it's also time frames in that regard. So those are some of the structural and operational issues that we had to deal with regard to the Act. So a lot of things have been improved, but it's just work in progress. With the limited period that we had to iron out all those issues. But what we have now done, what we're now looking at, is just to have a full institutional independence. Being established in terms of the Tax Administration Act doesn't give us autonomy. We're working under that act. So we probably will just need to have a Tax Ombud Act, for example, in future. That's what we're looking at, full institutional independence. Now, what are some of the things that we are dealing with currently? I mentioned the issue of those refunds. It is not enough to frustrate taxpayers. There's always a say that SARS around this time of the year, they withhold refunds so they can meet a target. There's always that kind of talk. Now, SARS will come back and tell you 90% of the refunds are paid within a specified period or within the time frame. It's only the 10% or less than 10%. Now the question is, what is that 10% comprise? What does it comprise of? What are the figures? What are the amounts? If you withhold one refund that is 100 billion, you may say, well, we pay everyone else 99%, 99.9999 gets paid within this time period. But if you withhold that one, it means that you would not have made your target if you paid that one. So considering such, numbers are always deceiving, in cases like this. So, but we want to be able to zoom in future to allay some of the fears. But the Act says we can do that with the approval of the minister. So we'll have to approach the minister and have a discussion. But one of the other things, serious things that we picked up is that when SARS in section 179, subsection 5 of the Tax Administration Act says before SARS can appoint somebody as an agent or clean their bank account, they have to comply with certain requirements. First, they must tell you, in the final letter of demand, it must state how much you owe, what will happen if you don't pay, such as judgments and all those things. It must also give you, as a taxpayer, an opportunity to approach SARS and, by way of requesting a compromise or a payment arrangement, and SARS must actually consider that application or that request. So what we picked up is that the letters did not comply with that requirement. So they will tell you how much you owe and the possibility of judgment being taken. So those final letters of demand did not comply. And we said, SARS, you need to revise these letters. Where you have already taken action or taken the money, you need to pay back because you did not comply. And I'm sure there are a whole lot of taxpayers who were caught unaware, and their money may have been cleaned up. And, well, because they don't know of the requirements, then they would definitely not challenge that. We picked up a few complaints and we ran with them and we said, you need to redraft your final letters of demand. So to protect taxpayers. So in a way, they are not complying with that requirement. Now, I'm not sure some taxpayers as well, they may pick up that there was a refund and suddenly the money is wiped out. There's a trend that we picked up, that instead of the refund being paid out, a letter will go out to the taxpayer. Please tell us whether we should pay you back or must we set it off against future debts. Now, if you respond, it's all fine. Maybe they can pay you. But in some instances, a person knew that they had a refund, but suddenly there's no more refund. And now what's happened? What happened to the figures? And they don't know. No explanation, no reasons for assessments were given, and they just simply raised an assessment to wipe out the debt. So that's something that we're dealing with. We're addressing a letter to bring them, to make sure that they really comply and do the right thing. Because in effect, this one may amount to theft. If this is, it's done unjustifiably with no reasons whatsoever, you owed me 10 Rand and you simply raise an assessment for the same amount to wipe out that 10 Rand. You're taking from me, you're stealing from me. So those are some of the things that we are looking into. We'll address them. I've got a draft letter there that must go to the commissioner within the next few days. We picked up some of these issues. So there are other things, dispute resolution. Now, when you object, you send a letter of objection, and you're out of time. You also have to give reasons for why your objection should be condoned. Now, somebody who sits that side looks at the objection and says, no, it's invalid. Please file another objection. Because they use the reasons that you did not provide reasons for condonation. Instead of saying, well, the reasons you provided, we are not satisfied, so X, Y, Z. So you get caught in this loop. You submit another objection, and then they still tell you the very same thing. So you are into this loop, and it's ongoing. So what we're doing, we're saying, look, your letters of disallowance or invalidation must say it categorically clear to the taxpayer what your decision is. So those are some of the tricky things. We realize that even with the decision not to condone, SARS does, in some instances, they really don't realize that people can object to that decision. So when you object to the decision not to condone, then they treat it as the main objection to the merits of the case. So it becomes a bit complicated. So those are some of the things. There are quite a lot of things that we're looking at. But this is for you as taxpayers and practitioners, this office for you to use. Now, we're looking at, when it comes to the service charter. Service charter was there many years ago. It was withdrawn back in 2008, somewhere 2007, from the website. It was very colorful, beautiful colors and the like, and beautiful ways. We had said to SARS, taxpayers need to know what service they can expect from you. You need to detail thoroughly. We've done, given them our inputs, because previously they were saying, no, 95%, for example, of the calls that come in will be answered within 3 rings or something like that. Now, how do I know whether I'm part of the 95 or part of the 5%? So that's, we thought it doesn't really make much sense. So we've given our input. So that document is in the hands of SARS, and we've requested them to give it to the public so that they can see. We took it the commissioner's way that he said he committed to the end of the financial year. But then again, he said, no, maybe even before Christmas. So we are following up on that. The other issue is the taxpayer rights. The initial reaction when we said you need to have a document that spells out the taxpayer rights, the initial reaction was that you have the Act, Tax Administration Act. You know, it's there. Taxpayers should, you know, just pick up from there. So how many of us read that Act just like that and know it in and out? We need one pager that tells us when you object, you have the right to do X, Y, Z. The right to object, the right to request reasons for your assessment, the right to do all this sort of things. So that's a document that we have drafted, and we have also discussed with Judge Davis, and we're going to be having a meeting because we have mutual interest in that. That is also going to, it's supposed to be released before the end of the financial year. So we're following that up quickly, and we just want to make sure that taxpayers know exactly where they can go when they have problems, or what they can do when they have problems. If you go to any hospital, there's a patient's right. You know, you find that listed everywhere. So one SARS also to be taking that initiative and putting them in all the branches, everywhere on the website and everything, all the taxpayer rights and the service charter. We want them to be published there. Now, we're working on the MOU because one thing that we picked up, now we have a system we can monitor the complaints that are coming in. We can monitor how long on average it's taking it was shocking because initially when we started the office, we said, you know, we must do this within 15 working days. And unfortunately, we will do, from our part, we'll do our recommendations, we'll do everything within that period, but then the delay will be on the part of SARS in implementing or finalizing the matters as recommended. And we pick up with this instrument. With now this new system, we can see maybe from September until around now, on average, it was taking 71 days to finalize that. It was a wake-up call for us, and because really it's something that we need to see to it that the commissioner acts quickly and it's not so as not to frustrate taxpayers. So in a nutshell, that's what we're doing. I can go on and on, but I'm passionate about having this office, having a right foundation, and let it run to protect taxpayers at the end of the day.
So before I hand over for questions from the floor, just from my side, I think you mentioned the taxpayer frustration. We're seeing more and more corporates saying, but I've got to make provisional tax payment now, but you owe me these millions in VAT there. And so you're seeing a lot of this kind of stuff happening. And I guess one of the things that I find that a lot of frustrations have come is that SARS will find any excuse to hold it up. So I recently saw a case of where a person, it was a matter in dispute. SARS had just plowed ahead, gotten a judgment against him, which they can do without even telling you that they're going to court. You've not really got an opportunity to defend it. Matter was ruled on in favor of the taxpayer. Went back to SARS, said, well, you don't owe the money. You need to do a rescission of the judgment. Months later, then all of a sudden, it's next tax year's things. They're going, oh, but you filed, but we're waiting for you to submit your paperwork. You're going, but that's got nothing to do with, and they just emphatically, unless that's 100% clear, they're not pushing on their judgment. And the reason why this one was a specific of importance, this case, is that this happened to be a director on a public company, and one of the criteria that they have is that they may not have, that year on year they get tested and they cannot have things like judgments like that on them and be regarded as board members. So there's a massive impact. We've seen impact of where they clear out the bank account of the company, and it happens to be 5 days before salaries are due. You know, it's a serious impact. Now, although the Ombud is there to help, I guess my question is that the aggression from SARS in the amount of action they take and how quickly they take it, rather than using these as last resorts, really last resorts, is for me concerning. So, from your side, is there a clear intention from SARS that they're wanting to improve that, or are they still going to use every possibility in the law they've got to be as aggressive as possible to collect, especially now that they've been called out for not meeting targets?
Look, I think a level of frustration from the collectors may drive them into certain things that are really not legally correct. Typical one is the one I mentioned with the letters of final demand not complying. We've had them withdraw those letters and pay back the money with those kind of complaints. Now, if anybody picks up that kind of issue, because we identified it as a systemic issue, they don't necessarily need to raise it with SARS first, because in those instances, because it's a systemic issue, we deal with it immediately. And we'll address the letter we don't address to a SARS official, we address it to the commissioner himself and say, this is what's happening. Now, one of those other problems that we picked up was because the taxpayer came to complain to us, he was subsequently nominated for audit. So, and there was even a letter to say, when it comes to the penalty, whether, who actually initiated the audit and the like, because, if you come clean before SARS, comes to you, then, when it comes to penalties, they must consider that. So it was written in black and white. The taxpayer initiated the audit by complaining to the tax ombudsman. So we said, no, this is not really what we need to protect this. And so we write straight to the commissioner and say, look at the behavior of this specific official. And suddenly the matter was receiving attention. And so we're busy dealing with that kind of issue, because that to us amounts to victimization. You can't say it in so many ways. That the taxpayer initiated the audit by complaining to the ombudsman. So it means if you go to the ombudsman, you will be audited.
So basically they're saying you're a risky taxpayer because you complained.
That's correct. But we're dealing with that. We want it to be, we mentioned previously there was a vibe that there may be certain people who get audited extra, maybe they were meant to be audited for 2014, and then you get audited for more periods, when the issue was relating to only 2014. So we're killing that. So if there are people who feel that they're being victimized, also it's something that we can take up with the commissioner. If he doesn't respond, obviously there are other avenues that we can address it.
Obviously, as a practitioner, I think one of the things is we don't always want audits not to go away, because we get to charge clients to adhere to these things, providing it's all clean. I wasn't the one who did it. If I can ask is there any questions from the floor?
Do you, as the Ombudsman, actually have teeth to actually go and attack them, because like they attack us? I've got 2 incidences, and it all goes down to the administration side of SARS. One is the debt collecting at the moment.
Yeah.
Now, I personally received a letter, phone calls, for 1 cent in PAY outstanding. Sure. Now, it's insane. And I'm not paying it, because the bottom line is anything under 100 Rand, I'm tax compliant anyway. So they're chasing after the wrong things. They really need to sort themselves out. The other thing is, again, it goes with regards to refunds. I have clients that refuse to put in a refund. Point blank, not interested. Because by the time, and especially when it comes to big import companies, 1 month they'll have a refund of 500,000 Rand. They'll rather pay in 100 because they know the next month they're going to have to pay in 600, so they'll just pay the differential. Now, because what's happening is, it's going to take them 3 months to get their 500,000 rand back. They're financing SARS. What can you do as the ombudsman? I mean, do you have the
Yes.
teeth to actually do something about it?
Yes.
Because I'm not feeling it. My clients aren't feeling it. And at the end of the day, we're rolling these things over, making the problems actually worse. We correct our VAT returns once a year, and that's at the year end, because these clients refuse to put in refunds.
If I may quickly come in there, those are the kind of things that we want to deal with. We can initiate an investigation. So if it's brought to our attention, even without a complaint, we can actually investigate and look at matters that get affected, people who are getting affected just like that. I can agree with you. In some instances, the SARS officials are focusing on the wrong things. One of the other things that we want to do in future, to look at redress. Because you can, as a taxpayer, you go to a practitioner or you go to your lawyers when there's an issue. You incur costs. And if it turns out that SARS was at fault and was wrong, we may ask for an apology, but the apology is not sufficient to compensate the taxpayer who suffered immensely. In the UK, they have what they call redress. So they can actually, the adjudicator can actually say to the revenue authority, you need to compensate this person. So we don't have such powers at the moment, but that's one of the things that we want to look at in future.
Just on that as well, sorry, in other tax authorities, you see that there is, sorry, like Australia, they give a certain period where if SARS or their revenue authority does not address, let's say, an audit or a risk or whatever in a certain period, it has to be assumed that the taxpayer, that in favor of the taxpayer, and kind of addressed that way and refunded, and it now becomes a risk for the revenue authority for not timeously addressing issues. So we do see in other countries a lot of those, and I know that we've had these conversations. We try and see how we can bring a lot of those into the South African part, and of course SARS will try and object as much as possible to this. It's not in their interest for it. There's a question out that side.
Do you also look at system problems like the VAT ADR ones on e-filing that does not work? And also, like SARS has raised the assessment, then you want to object against that assessment, and the system tells you there is no query, you can't query it. I actually went to the practitioners unit, and we actually had to query the next month to get that month's VAT period sorted out.
Anything that has to do with service, and those systems are part of service at the end of the day. So those issues, you can raise them directly with our office, and we can look at them.
Yeah. Also, just as a note, don't forget to raise it as well with the professional body, with SAIPA, because we also had engagement with SARS. So if we pick up system problems like that, it's also for us to raise that with SARS. So use the channels that are there to address, because we all, in fact, I think the minister made quite an important comment that the relationship is quite an important part moving forward. And I see that relationship is essentially quite critical between the tax practitioner and SARS. And the go-between there is effectively your controlling body. So use the channels that are there, escalate those matters. We've got people in the office that take those, and if we pick up something like a system problem like that, it immediately gets escalated quite aggressively to deal with. And if it's not being addressed or given attention, the Ombuds also is there to take those and to try and address the issue. There was a question there.
The pay as you earn, SARS seem to really enjoy taking money out of those. We have a tax credit on one of the pension or provident funds that we have of 4 million rand with SARS. But because it's in a different year, they help themselves to another 4 million. So in essence, that was 8 million rand. We've approached the office of the Ombud, and still nothing's happened. We've approached SARS, it's been 2 years, and we're just getting no joy. What do we do?
I'm not aware of that. But one thing we can do, maybe we can have a conversation, we can see how we can try assist, and I can communicate with my office to see exactly what's happening. So you and I can communicate.
Just my experience is that there are follow-up mechanisms within the Ombuds office as well. Utilize those. Once you've submitted something and you're not getting feedback, it's also our duty to kind of follow those through. And again, if you have got problems like it, don't forget that as your controlling body, you can also address your concerns to us in a problem like that, and we can also try and facilitate these kind of lines of communication. Remember, it's all about relationships in future.
Yes, yes.
There was a question out this way. Yeah, there we go.
To add to a point that was emphasized on this side, there's a problem whereby SARS usually they make it very clear that e-filing is not their product. And very often they send you, when you try to speak to them online, on the phone, they send you to the branch. You call the branch, they'll tell you a consultant comes on Wednesday, you get there, but the consultant is not there. And very few people actually care if you will get that e-filing assistance. So it goes back to that question to say, what is your scope of work? Do you help in such inefficiency issues? On the notices that SARS sends, for an example, an individual who makes a tax return, who files a tax return, they would get a letter that needs more information, where SARS demands documentation. But it's a whole lot of jargon. At an ultimate end, you find that all they're looking for is medical aid certificate.
Yes.
But they will give you a list of possibilities that says, if you are, give us a travel, or if you are, and or. And at an ultimate end, they're just looking for one document, which you find out when you call in and say, actually, what are you saying? And the consultant will say, give us your medical aid certificate. Those letters, they really, in as much as they enrich us, practitioners, but it's not making the individual's lives, or rather an ordinary person's life, simple, because then they start looking at SARS and they go like, oh my gosh, we need to pay all these monies. And they actually become uncompliant, is that the right word? They don't comply, right? And it is a big problem. And the last thing that I want to ask is, the turnaround time with SARS is quite, I don't have the right word for it, but I want to find out with the Ombudsman, and also it goes back to the issue of process. What is the process to follow in order for us to log queries with the Ombuds? Do we call and wait for 21 working days and get a letter of advice or whatever, and stuff like that? And also, what if we have an issue? I know that if we've got an issue with SARS, we can go to the Ombuds. But if you see that there is a huge area where the client is not complying, is it advisable to go to SARS and report it there, or do we even should we just take it up directly with the Ombuds? I know it was quite a lot, but my apologies.
Okay.
Just before we answer, on the question of the letter, besides it being a template, I think it's a strategy, because instead of them saying, we just want this, they kind of leave you guessing, so you send everything. Maybe they'll catch you out on something else.
Well, we picked up these problems with these automated letters. One of them was the objections, and I'm glad you mentioned this aspect. I also received a letter after filing my return, and it was so vague that it was not telling me what actually it is that I need to upload. I needed to engage a professional, a tax practitioner, and they made sense out of that, and they uploaded the document that was required. But I take the point. We will deal with that kind of issue. So if you go to the branch and you're frustrated, and it's part of service. That's what we are mandated to do. If you are not given the kind of service that you require, then we step in. But let's just make sure the process of lodging a complaint with us, it's a simple process. You complete a form, but it's not. You would be required to first exhaust the SARS internal complaints resolution mechanism. except for cases where it's systemic in nature or there's undue hardship, you can come directly to us. But you must follow, under normal circumstances, I must emphasize this, if you make a call to SARS, you give them 21 days, they don't respond. The second time, you are lodging a complaint. Please don't say, I'm following up. You're saying now, I am now lodging a complaint. So they must give you a reference number for that. And after 21 days, they haven't resolved the issue, then you come to us. I must emphasize, don't go make 10 follow-ups on the same issue months after months. They'll give you the new reference number, and when you come to us, we may say, well, but you haven't exhausted the SARS internal process. But we will not want to frustrate you if you've been there many times. We may just as well assist you. But you must have gone through the complaints management office. It's a simple form available on the website. There's a complaints guide as well, also available in all languages for that matter.
By the way, we quite like having these cryptic letters because just like legislation, we want it complicated to keep us in jobs. But yeah, the clarity of these things often is problematic. I think just to also from my side to emphasize that I think one of the most difficult parts that, and again, I started in tax when it was, you pretty much, it was based on relationships and the people you knew at the offices and that. And over time, the massive difference has been the lack of the ability to communicate with a person. And you mentioned follow-up, because it's not owned by anyone. So you can't go back to that person. So unless it's a physical audit where there's an auditor assigned, it's very difficult to follow up. And that's where I think a lot of your frustration also comes in, is that process has become very like removed from the whole point of someone taking responsibility and having a clear point of contact. But at the same time, as when you have too much of where you're dealing with a single person, that's where you're now starting to have problems with fraud, corruption, those kind of issues as well. So, and also resources. SARS uses those mechanisms to utilize its resources right through the country rather than at branch level only. So there's an argument, I think, on both sides. And for me, I always say to anyone in my office is that just remember that when you phone the call center, you're phoning them for a certain reason. Don't try and solicit tax advice from a call center operator. So you're phoning for a specific reason, a follow-up to get a case reference. Each part has its purpose, its objective, and only follow that and follow the steps through. Try and not get frustrated with the SARS people. Just remember they're also people. They're very lonely. Not many SARS officials have friends. Okay. They have families. They don't have friends. No, I'm joking. I think at this point, it's time for us to hand over from the economics point of view, and I'm really looking forward to see how what input you've got in terms of the numbers.
So good morning, ladies and gentlemen, and thank you very much for the invitation, and thank you very much to the kind lady that put the presentation up here. On the topic of age, I have to be careful when I get to these things. Although I only dye my hair this color, I am not as young as I look. The other day I had to show somebody my ID book. They looked at it, they looked at me and said, "This is not you." So I want to cover the following with you this morning, and when I'm out of time, please give me a 5-minute warning, Etienne. I want to talk about the biggest budget issue that's a non-budget issue. I've done a lot of work with Fanie Huber and Adele Breitenbach on the matter of the fiscal cliff. I want to give you an update of the fiscal cliff. I want to talk about the inflation target. I see the higher income tax as a wealth tax, and I see the higher dividend withholding tax as a wealth tax. I want to talk on that. I want to talk on the SACU agreement. I have a few other comments on the budget, and then as a former colleague once said, everything must in the end come to a conclusion. The biggest budget issue in South Africa is a non-budget issue. It's really the question whether Minister Pravin Gordhan will keep his job or not. Everything in South Africa, as far as finances, as far as economy, as far as the well-being of this country, it turns on this question. Will Mr. Pravin Gordhan be the Minister of Finance or not? If I can add just a little footnote, there's also another huge non-budget issue facing South Africa at the moment. I was not asked to talk about this matter this morning, so I will really mention it as a footnote. The matter of SASSA grant payments to poor and deserving people, to beneficiaries. In terms of the existing contract, they have to stop using the service provider by the end of March. So in terms of the current legislative structure, the court ruling, they may not pay these payments from the 1st of April. They make 262 billion rands a year. There are 17 million beneficiaries who can, as the matter stands at the moment, not be paid from the 1st of April. I'm sure that was not me. I'm sure the minister is listening in, because I'm about to say Minister Dlamini must be fired for dereliction of duty. Minister, do you hear me? The Minister of Social Development must be fired for dereliction of duty for allowing this thing to deteriorate in a crisis. At the same time, our fearless leader, Mr. Zuma, is nowhere to be seen, although I'm glad to report that he didn't sleep in Parliament yesterday. He only slept in the MTBPS. I get the feeling that Mr. Zuma only steps in if there's personal or family interests for him to protect. This is a national crisis staring us in the face. Nobody's paying attention to this. Nothing is happening. So, ladies and gentlemen, the other big issue is also a non-budget issue, but let me focus on the issues at hand, namely Minister Pravin Gordhan. You see, the minister is listening in. Minister Pravin Gordhan must stay on as Minister of Finance to avert the credit downgrade. Now, this is just a grading scale. If any of you are interested, you can get the slide. However, the important point is, as you can see here, the blue line is the running yield on South African bonds. So from 1990, as you can see the little dots moving up, I know there are two screens, my arm is not that long. As you can see the dots moving up, that's South Africa's rating going up. You can see that the yields on South African bonds actually declined, implying that borrowing costs for the South African government became cheaper. Dennis made reference to the huge interest bill facing the government. If we do get the downgrade to junk status, the returns that we will have to pay on borrowing will go up. The bond yields will go up back to the levels where they were in 1990 and 1995. Just about double what we pay at the moment. So our interest bill might increase substantially if we get the downgrade. Ladies and gentlemen, the stakes are high. If Minister Gordhan is removed, the country will get the downgrade. Then about the fiscal cliff. Now the fiscal cliff, with my co-researchers, we've defined as the point where civil service remuneration plus expenditure on social grants will equate total government revenue. We had really scary figures before, as I will show you in a moment. Things are looking better. But the important point I want to make in these two slides, especially the one on your left, this one on your left, is that the revenue of the South African government really follows very closely nominal economic growth. A nominal economic growth in turn is driven by inflation plus real economic growth. So if the real economy grows, the government gets money. If the real economy doesn't grow, the government doesn't get money. Under the fearless leadership of Mr. Zuma, the country is caught in a low growth trap. South Africa is going to suffer low growth until 2019. Our best hope is that people will start investing again from 2020 on, after the Zuma administration. So until 2019, we will have low growth in this country and government finances will remain under serious pressure. My best advice when I speak to people is what I call is have a vision 2020. There will be a future after the Zuma administration. Then on this fiscal cliff, I've made reference to social spending. The other big one, of course, is civil service. And in short, South Africa can no longer afford its civil service. I know some of these people work at SARS, be that as it may. The size of the civil service, it's just too big. And the civil service remuneration bill is too big. So here you can see we employ 1.558 million civil servants in South Africa, the figure down there. It is, however, reassuring to see that since about 2013, the growth in civil service employment really leveled out. However, unfortunately, the growth rate in the civil service remuneration bill didn't level out accordingly, for the simple reason that civil service employees get remuneration adjustments well ahead of inflation. They get substantial real remuneration adjustments every year. South Africa can simply no longer afford this, so we need a continued moratorium on civil service employment, but we also need restraint in civil service remuneration adjustments. The annual adjustments of civil servants must be smaller to make sure that South Africa avert the fiscal cliff. So the fiscal cliff, then and now, as I call it, the initial work that I did with Hanyana and Adele in 2012 showed that South Africa was rapidly on its way to a fiscal cliff by 2026. I'm glad to report now that the picture has changed considerably, as you see in the panel on your right. We are not out of the woods yet, but the trend is completely different. By 2059, given the current trend, we will still not be in trouble. However, what is disconcerting is that we see an ever increasing trend. So the immediate crisis has been averted, but the panel on the right, we need to change the trend of the black line. So a lot has been done. We need to give government, we need to give the National Treasury, we need to give our government a lot of credit. We are very grateful for what our government has done to avert the immediate danger, as we've alerted to in 2012, 2014. We showed this. A lot has been done to avert the immediate crisis, the immediate danger. We really have to give the government a lot of credit for that. We're not out of the woods yet, but at least we are heading out of the woods. We are no longer mulling around in the woods. So, as I've said, fiscal austerity must be retained. About the inflation target, this is a topic that is really not getting any attention when we talk about the budget. The Reserve Bank is responsible for achieving the inflation target. The target is actually set by the Minister of Finance. So at a minimum, as an economist, I would want the Minister at least to have one paragraph in a budget speech on the inflation target, even if it's just to say the Treasury, the government, or in agreement with, or after consultation with the Reserve Bank, decided to keep the target as is. The Reserve Bank cannot change the target. The Reserve Bank's responsibility is to achieve the target. The target is set by the government after and in consultation with, and the lawyers will tell me you can't do after and in, but after and in consultation with the Reserve Bank. It is actually announced by the Minister of Finance. The first target was announced in 2000 for achievement in 2002, and subsequently in initial years we had reference to the target every year. Nowadays we have no reference to the target whatsoever. This is a topic that we need back in the budget speech, in the budget documentation. These are selected targets from other countries. Just to make the point that South Africa's target at the outer edge at 6% is on the high side. If you look at our inflation figures since 2000, you will see that inflation averaged 5.8% per annum since 2002, which means the upper edge of the target has become a hard target. To ask anybody in this room, what do you pencil in your planning assumptions for inflation? Everybody says 6. We need to break that mold. Hence, it's necessary for the government to announce a new inflation target. I'm in favor of now announcing a target of 3 to 5%. For the simple reason that this was the revised target that was announced back in 2002, but was never actually implemented. It was abandoned within 6 months, and it was announced a year ahead. So, it's time to start a debate on the reintroduction of the abandoned inflation target of 3 to 5%, and it is time to get this back in the budget speech. We need to focus the nation's attention on the target. I see the higher income tax as a wealth tax, the tax rate of 45% of income above 1.5 million. Let me hasten to add that I've been advocating this with my two co-researchers for the past 3 years. We've been asking for a higher tax rate of 45% for the past 3 years. The reason why we are in favor of this is we are not in favor of a wealth tax on capital assets, as Dennis referred to, for a number of reasons, amongst others the problem of identifiable assets. If we introduce a wealth tax on capital assets, I have no doubt in my mind that the holding of foreign banknotes by South Africans in vaults will become a very attractive asset class. Of course, you cannot trace it. Yes, I know it is illegal, but it's also illegal to exceed the speed limit. Some of us do that occasionally. So, I feel this 45% tax is a wealth tax. I'll say a few words about that in a moment, and I hope we can continue with that without introducing a wealth tax on capital assets. However, the government is coming to desperate measures. We are reminded of the work of Arthur Laffer, an American economist of the 1980s, that really made the point that if you tax people high enough, you will have zero income. Or to restate, if you put the personal income tax on all income at 100%, the tax receipt on income will be exactly zero, because nobody will be prepared to work. They tax away everything that you earn. It's much nicer to sit at home than to do something. So we do not know where the inflection point on the Laffer curve is. We might be approaching that point in South Africa. It is a matter of concern. However, we've looked at some of the figures, and we are in favor of an income tax rate of 50% on income above 5 million rands per annum, also in an attempt to avert a wealth tax on capital assets. I can see shock on your face when I mention 50%. Those of you who were born after me will be shocked to hear that the highest marginal income tax rate ever achieved in South Africa was 72% in 1973. 72% marginal tax rate in 1973. Admittedly, ladies and gentlemen, fringe benefits were then excluded from the tax base. It was only on cash income, but nevertheless, it was 72%. Governments can do wonderful things to take your money. Don't look shocked at 50%. They've done worse in the past. We've worked out that a tax rate, marginal tax rate of 50% on income above 5 million rands per annum can raise another 3.3 billion rands per annum. I have to add again, we don't see this in addition to a wealth tax on capital assets. We see this in lieu of a wealth tax on capital assets. We feel it's a more efficient way. The collective system is already there, and there is ability to pay. The problem with the wealth tax is you have people sitting on valuable assets like a house with very low income. They didn't ask for the house to become valuable. If you bought a house in this region 40 years ago and you still have it today, it will be the most valuable house in South Africa. Your income might be very low, but you can't sell your house brick by brick or room by room to pay the tax on it every year. I also view the higher dividend withholding tax as a wealth tax. And I'm afraid to say I think we are going to see more to come in terms of a dividend withholding tax. When there was big calls for the abolition of the secondary tax on companies, I was the one person that said, please keep it. Yes, but it's unfair and it's double taxation, and I remember all those arguments. I said, please keep it. Don't think government's going to abolish that and not give us anything else. And the secondary tax on companies, on dividends, it's becoming an easy tax because it's deducted before you get it. We are going to long back for the STC on companies rather than the dividend withholding tax. Watch this spot. Okay, then the SACU agreement. Not many people are aware of the SACU agreement. It's the South African Customs Union Agreement. The SACU comprises South Africa, Botswana, Namibia, Lesotho, and Swaziland. South Africa's GDP comprises more than 90% of the SACU GDP. And South Africa pays a considerable subsidy to the BLNS countries through SACU. The transfers are a best estimate, 2015-16, the final figures are not quite in, 51 billion rands. That is 1.2% of South Africa's GDP. That's really paid away as development aid to the BLNS countries. The international norm for such donations, 0.7%. This makes South Africa one of the most generous donor countries in the world, and we get no credit for it. Incidentally, the SACU payments to Swaziland just about makes all the government income of Swaziland, and amongst others, it is used to buy a wife for the King of Swaziland every year, and I'm tired of buying him wives. I think he has enough by now. So you can see the figures here. We really need to renegotiate this. South African taxpayers can no longer afford to buy wives for the King of Swaziland. Period. We've bought enough. So, a few other comments on the 2017 budget. I am not in favor of a VAT increase. I will still argue with Dennis on this point. The fact that there's no VAT increase is positive for poor people. It also shows that our government cares for poor people. If we increase VAT, this country might go up in flames. It's as serious as not paying social grants from the 1st of April. The country may go up in flames, and that is not in the interest of any one of us in this room. It's bad enough that the Ford Cougar burns. We don't want to see more fires. So, in my view, it's positive that VAT didn't increase. I like the argument that was made here that we put VAT on fuel without giving anything back, and that might give us the extra VAT, 1 percentage point that we are looking for. I think that is really a neat solution that needs to be explored. And I really cannot see that going up for whatever reason. The negative demonstration effect is something that we really need to take into consideration. It was disappointing to see no adjustment to the VAT registration threshold for vendors. In my view, it's too low. It's a huge administrative burden. It's a welcome commitment to pay suppliers who met their commitments within 30 days. But there's uncertainty over possible sanction of officials who do not meet this requirement. We have this strange thing that a company does work for a government department. It issues an invoice, it has to pay VAT at the end of this month, and it waits 6 months for its money. And many small businesses have gone into bankruptcy because they had to pay VAT on money they have not yet received. Now, of course, a very neat solution has been developed. It's called the pro forma invoice. Watch the spot. Next year, there will be a clampdown on pro forma invoices. So the government is really taking VAT on money it has not paid in the first instance. So I want to see action against officials not meeting this requirement in the same way as I want to see action against the Minister of Social Development. Then there's envisaged cost reductions announced in the budget. Of course, I'm all for cost reduction. However, the budget is high on promises, low on details. More specifics are urgently required. I really just think, cost reductions, and I read in the newspaper about expensive cars bought for cabinet ministers. Something's not adding up here. The one minister talking about savings and cost reductions, the other one buys a 1.4 million rands car. Is he living in the car or is he just driving in it? So I feel very strongly that the South African government, who spends 3 billion rands of our tax money on imported vehicles every year, should stop importing vehicles and buy South African vehicles. Ministers can be very comfortable in the back of a 3 Series BMW, proudly manufactured in Rossouw, or in the back of a C-Class Mercedes, proudly manufactured in East London. There's no reason why they should have to drive bigger cars, more expensive cars. They should lead by example, by proudly South African. Thank you. As I've said, I view the dividend withholding and marginal income tax rate increases as wealth taxes. So let me turn to my conclusions. South Africa can no longer afford its civil service. And civil service trade unions should refrain from asking. And I want to underline asking. It's actually asking. It's unclear why these trade unions always call these demands. They should stop from asking large and unaffordable remuneration increases. And for that matter, stop using the word demands. We are tired of that. We teach demand and supply at Economics 101. Then the moratorium on civil service employment should be retained. Tax revenue, of course, tax cuts preferred to avoid tax increases. Fiscal drag is preferred to income tax increases, which in turn prefer to wealth taxes. There is the danger of dampening economic activity, and then, of course, the Laffer curve I've made reference to, and I've covered the VAT point. Then I want to see the inflation target reduced to 3 to 5% from the current 3 to 6%. Then I want to see a reconsideration of the tax on interest. I think interest should only be taxed on an after-inflation basis every year, and it should be taxed in the same way as dividends. Namely, an interest withholding tax, like a dividend withholding tax, at source on interest payments, on condition that the interest is adjusted or an allowance is made for the rate of inflation. This government is taxing us on inflation. The government should stop taxing us on inflation. Please, the same applies to fiscal drag, incidentally. Dennis says more wealth taxes will not encourage immigration of skilled people. The jury is out on that one. I'm not sure. We will see this year. Of course, taxes are not the only factor impacting on a decision to immigrate. And let me be honest, I'm here for life. I'm too old to immigrate. Nobody will want me in any case. However, my final remark, South Africa is in desperate need for higher economic growth, which theoretically remains the only long-term solution. Unfortunately, we will only get that from 2020. Thank you very much, ladies and gentlemen.
So let's take, we've got time for, let's take 2 questions, and then we'll open to a panel at the end. So Mamate and Faith.
High income group earners will stop working because of high tax liability. I want to assure you that high income group work not because they have a high income group earners will continue to work, not because they have a tax liability to meet, because they are intellectually active, and they prefer to be intellectually active. If you want to tell them to stop working because you're paying high tax liability, you are encouraging boredom. They'll go faster to the grave. So are you saying to me that they'll prefer going to the grave or they want to pay high tax liability? I think we need to check your assumption on that one. So being boredom is something nobody wants to do. And you're not the only person who said STC is a good tax. There were lots of reasons why people said it was good. But we need to investigate why it was scrapped eventually. SARS was pressurized by the industrial community that STC wasn't a known tax internationally. People heard of dividend tax and not STC. But many people, including me, held a view then, 10 years ago, when I was young and handsome, that maybe STC was a better tax. Secondly, with regard to VAT and increase, I endorse your view that that debate was slightly skewed. So SAIPA should write an article to explain a few things. One of the reasons is that when people say that South Africa's VAT is the lowest in the world, so they compare it with the standard VAT rate of other countries. But you know, in every country in Europe, there are 23 countries in Europe, they have four tax rates, a 0 rate and maybe 25. but they'll have a 17% and a 13% as well. So when we compare South Africa with the rest of Europe, we're only comparing them with the standard rate, which is like 25. So if we hold the view, ours is too low. But what we forget is that they also have two other rates, a 13% and a 17%. So one of them will say, like, when you have a newspaper, your VAT will only be 13%. But most of them will tell you there's zero rate for prescribed medicine. So we have multiple VAT rates in those other countries. But South Africa use the evidence selectively. They only refer to the standard rate of those countries, which may be 25. But they have a whole huge of items that fall between the 13% and the 17% and even the 0%. Yeah. So you find almost every country in Europe, prescribed medicine has a zero rate on VAT. So if you look at the picture in totality, it's a different image we get. So the standard may not be 25, it probably be far less than our 14% as well. So that debate is highly skewed. We need to investigate that. So SAIPA should write an article on that topic. Thank you very much.
Just before we talk to that, just remember from a VAT point, when they do comparative, even in Africa, we below the average mean, which don't have multiple rates. But the trend internationally is to shift towards indirect taxes rather than direct taxes. And that's why VAT also starts making sense. So you'll see that kind of shifting. And you know, just from the motive for us using VAT as a basis of collection of extra taxes is not so much because it's a low average, it's because we need the additional revenues. It's a necessity, and which tax will yield the result for the necessity. That's where the argument actually formulates. It's not based on comparators. That's just as a comparative to show where are we tracking to kind of see if it's in line or not in line with international trends.
Is Sheen on?
Yeah.
You made a number of very valuable points adding to the debate. I just need to come back to your very first remark about, you called it tax liability, I called it tax rate. All I said is if your tax rate is 100%, people will stop working for the simple reason that they will get zero of their income. The closest or best case study we have on this is when the tax rate in Britain on what was then called unearned income of individuals went up to 98% in the late 70s. On the one hand, people stopped saving because whatever interest they were paid, they were taxed at 98%. So they only got 2% of the effective interest. People literally stopped saving. And the same applied incidentally to dividends, which in Britain was then taxed at 98%. Companies simply stopped paying dividends. So at some point, your tax rates become so high that it permanently changes behavior. That's the important point we need to remember. Whether it's at a personal income tax of 50%, I do agree with you, at a tax rate of 50%, people will continue working. It was true in 1973, when the marginal income tax rate was 72%, that doctors started working shorter hours, because they felt that working extensive hours, they just paid 72% of that extra income into the tax net, so they made sure that they worked less hours to reduce the income so that they stayed well below the tax rate at the time.
Okay.
I just want to pick up on one area that was covered in the budget last year, where the minister muted the consolidation of parliament to have just one house rather than keeping the two going. And we haven't had anything since. And if one is looking at how can we cut down on the government spending and the wasteful spending that we are seeing, a lot is sitting there. Then the other one, which obviously it rears its head now and again, and it was heavily emphasized this year, is the idea of twin peaks. And I think during Tito Mboweni's time, it really was there, and it was as if it's going to be implemented. And what's your view on having the prudential regulator, the market conduct regulator sitting in the two areas, one in the Reserve Bank, the other one with the FSB? my view, that's another bureaucracy that is going to be brought, and I'm not sure how it's going to assist us in moving forward in the state, or in our economic state that we are currently in, by actually having those two powers.
Can I deal with your second point first? As you've seen in my CV, I worked at the Reserve Bank, although I must point out that I never worked in bank supervision. My take on the matter is that the whole world is trying to run banking on too low reserve requirements. And in my view, we are writing very extensive regulations to try and run a banking system where our underlying reserve requirement is too low. And in my view, but again, I've never worked in bank supervision, we can overcome many of the problems in banking regulation by simply running through regulation banks with higher reserve requirements. I know it has negative impact in terms of the ability of banks to make loans. It increases the cost of borrowing. I know all those things. Twin Peaks will work until we have the next banking crisis. That's my view. If I can come back to the seat of parliament, it was mentioned in last year's SONA address by our President Zuma. The government will consider moving parliament from Cape Town to Pretoria, the administrative seat of parliament. Now, the seat of parliament in Cape Town worked way back when parliament only met from February to June. Nowadays, parliament is a full year affair. Back then, when the system was designed, parliament only met from February to June. So the government ceremonially moved from Pretoria by means of the now defunct white train, which carried the cabinet to Cape Town. It was, you saw pictures. Government is now moving to Cape Town. It was not necessary for officials to fly to and fro all the time. Government was in Cape Town for 5 months of the year. That was the seat of government. And then it moved ceremonially back again by the white train. In those days, we had different school syllabi for different provinces, and there were even schools in the then Western Cape province, in Cape Town specifically, running Transvaal school syllabus so that these officials who moved down with their families for 5 months could put their kids in Transvaal schools so that they could come back. Now the system has changed. So the model on which the two seats were based makes no sense. However, it was rumored at the time of the announcement that the government wants to move Parliament out of Cape Town because Cape Town is a DA municipality, while Pretoria at the time was an ANC municipality. Since now Pretoria, Tshwane, is under under DA government, and there are rumors that the appetite for such a move disappeared owing to the change of local government in Tshwane. But it is necessary to point out that it was announced about 2 weeks ago that some commission has now been appointed to look at the financial implications of such a move. So it is still somewhere but very low on the radar, and it will of course be a very expensive move, and in the long run, depending on the cost of the new parliamentary building in Pretoria, if that is not an expensive new building, but if an existing building is rather used, it will save us money in the long run. I have no idea what the appetite of the government is at the moment. Let me just be honest. If I was an MP, I would much rather be in Cape Town than in Tshwane. Enough said.
So just from a tax point of view, there's a few things that we need to take note. If we look at, for instance, the dividend tax, that's probably one of the biggest surprises that we had is the increase of the dividends tax. There's a few things to note from it. One is that there's an arbitrage type of scenario here, because if I don't increase that rate, but yet I create a tax rate of 45%, what I'm doing is I'm actually saying is, well, rather take your funds via the means of dividends rather than taking it as a normal salary, perhaps. Even though if you do the numbers, you'll see the effective rate after you take companies tax as well as the dividends tax into account is now 42.4%. So it's still cheaper than the 45% you would if you were effectively at the 45% tax rate. So there's still some opportunity for people to manipulate and abuse that mechanism. But what I'm thinking is more likely to happen is for companies to, instead of just pushing out dividends is to sit back and say, well, instead of pushing out an expensive dividend, just like we've seen before, and when dividend gets expensive, is rather to say, how do I alternatively do this? So perhaps we'll start seeing more scrip dividends, things like capitalization issues, perhaps reinvesting those monies, and hopefully, because we know there's a lot of cash being held by corporates, perhaps some of that can go into infrastructure and development and those, because essentially when you're doing scripting, you're essentially giving additional rights rather than actually giving out a dividend. And that cash is now free to be used somewhere else in more in a capital sense. So perhaps we'll see that shift happening. But in the meantime, we mustn't forget that we still have double taxation treaties that for many occasions will restrict the amount of dividends tax that we may withhold in terms of paying it or exiting it. So those will obviously still restrict, and some are 10%, some as low as 0% in terms of dividends, depends on the amount of equity holding that you may have. So I think the effect that the increase in dividend tax will have is one that I will be watching carefully to see how that unfolds. And again, when I started in my studies in economics and that point, it was kind of a known thing that dividend wasn't that often paid out. It was more companies held on to their cash. So the trend today is very different. If you look at, for instance, Apple, Steve Jobs was famous for criticizing that dividend should never be paid. In fact, while he was at the helm of Apple, no dividend was ever paid. He said you bought into the share because there's value in that share and not because there's a promise of potential dividend. After he passed, you'll see that the shift of their company moved to now having to pay dividends because they wanted to retain the shareholder. So dividends have become it's almost like a retention tool for shareholding rather than the real purpose of wanting to invest. And I think perhaps that's where a big shift will come from. Another surprise I had.
So
yes.
Can I just make a mark on
Yes.
this? Ladies and gentlemen, I have to point out that in the 1970s in South Africa, dividends received by individuals were effectively taxed as income at the marginal tax rate. So, I mean, it was just added to your income in the same way as interest is added to your income. There was a small technical deduction. It was a formula that you could use that was never adjusted for inflation. I can't for the life of me even find the formula today. But dividends were effectively taxed at your marginal tax rate.
Yeah.
Something like that,
Yeah.
yes. And the balance was taxed at your marginal tax rate.
Yes.
So I'm very concerned. There's a lot of scope in dividend taxation for the government. Again, I must stress, we are really going to ask to get STC back. Sorry, I've said enough.
Interesting, STC, one of the reasons why it was quite confusing for foreign parties is because it was a secondary tax on companies. So what they would do is they would see it as a tax rate to companies. So take the normal corporate rate as well as the STC and say that is the corporate tax rate. And the big shift was to say, here's corporate rate and here's dividend tax, even though it might be the same numbers because it was better understood. At least that was the motivation at the time as well. The one thing that I found interesting as well is that we're sitting at a corporate tax rate of 28%. And we have a lot of focus, if you look at the NHSC and that, you'll see there's a lot of little places where they're wanting to kind of close the loopholes and close the potential abuses that one would have in everything from transfer pricing to share-backed transactions to buybacks to dividend stripping onwards. Now, through all of this, what makes South Africa competitive and what will force a company to do, and the big term, of course, we have is BEPS, which is base erosion and profit shifting. And if you look at the basis, an individual wants to store wealth offshore, where a company wants to shift its profits offshore, not store its wealth offshore. Now, in encouraging profits to go offshore, if my tax rate is not competitive and I can get a better deal somewhere else, that's where companies will start looking to it. So when you start considering that America and the UK and all of them are pretty much doing a race to the bottom in terms of tax rate because they don't see corporate taxes being the key place for collecting taxes, there will be an added risk that there could be an exit or at least a profit shift taking place under our current rate. considering it's a very low rate, and we might not have adjusted it, but the risk is that there's a potential for profit shifting. So, and we know that SARS has, over the last few years, been understanding that there is a need for them to reinvest into transfer pricing and dealing with those, and they've re-resourced those. And you speak to many commentators from Matthew Lester on, and they'll tell you that the next big thing to come, and we saw it again yesterday in the minister's presentation, is the next big thing to come in terms of tax administration is going to go after companies that have an international footprint and looking at whether or not you are transacting at arm's length, putting emphasis to transfer pricing and emphasis to whether or not you are doing profit shifting. So that, for me, at least for the next few years, is going to be the source of many corporate tax disputes, is in terms of the transfer pricing side of it. From an individual's point of view, we've already seen that take place in terms of trusts, where it goes after the loan. I actually predicted this many years back. I remember about 15 years ago, I made a prediction to say that loans will be attacked, and the first step is you must understand what a loan is and what the purpose of a loan is. And I was told that, that I need to go reevaluate my understanding of how business works and how people do things. And it came true, because a loan has three basic criteria. One, I give you money with the intention that you're going to give it back to me. So if I don't know that you're going to give it back to me, it's not a loan. So many of these deals and trusts, I give you a loan, no repayment term put to it, it's not really a loan. Okay? Because when you take a loan from a bank, what's the first thing they're going to say? You have to pay it back in the following tranches by X date. Okay? The next one is, how am I going to secure the loan? Am I going to just give you my money and take risk without it being of value and me having some security to it? No. So typically these loans, there's no security offered to them. In fact, most of them aren't even in writing. And lastly, why would I give you my money to use after taking time value of money into account and not get a reward for it? Interest. So the three basic criteria of a loan, if you wanted to do it at arm's length, is term, security, interest. And that's exactly what they're attacking. Because in these typical structures, they miss those typical elements of a loan. And I wouldn't be surprised if this stays the theme for some time forward. I know the question is, will we abandon estate duties or move forward? In fact, it seems that the trend will be to, in fact, reinvigorate estate duty and bringing in deeming provisions and that to try and curb those abusive actions. I very much support as well the thought that to tax capital is a grand idea, and I've read from Piketty on in terms of their concepts. For me, the biggest challenge always is going to be, how do I classify and how do I identify and how do I physically touch and say this capital is what I want to tax? And at the moment, the most convenient way for us to do it, until we have a better model, is to tax on earnings, and then there's still a further capital gains tax as well at the point of realizing it. But remember, capital gains tax, or any form of tax, that if you are too aggressive, also from a corporate point of view, very different from an individual, will affect how much they can reinvest into essentially the next asset item. Now, we do have some rollover reliefs, but not necessarily enough. And that's where we would want to probably see that more addressed. The question of savings also comes forward. Now, we are not a nation known for having a savings regime to it. So we saw the increase in the tax-free saving threshold going from 30,000 to 33,000 a year, which, you know, we expect those things to keep on increasing and moderating. But may I ask you, as a serious investor, would you put it in a tax-free savings account? Is that, which is capped, is that where savings really comes from? That is savings at a certain level. My kids have an account like that because I help it to teach them savings and they don't pay tax on it. Great. But if you've got sufficient funds to be a real investor, a real saver, that doesn't really do it for me. And so I very much believe as well that the whole way in which we tax interest needs to be revisited as well. And the whole concept of savings, and again, we can tax it or not tax it, but the big problem with savings is that at the starting point, at the point of when your children learn about the value of money, it's there that they already need to understand the purpose of saving, and we haven't really had that throughout. Generally in South Africa, we spend more than we even earn, let alone save. That's a cultural thing, and that needs to be addressed, which I don't believe tax can actually address. Now, as a final comment, one thing I did not see in the budget that I was hoping to hear something about would be regards to exchange control. Because there is an argument that we are perhaps still restricting foreign investment because of exchange control. We're still restricting foreign trade because of exchange control. And then there's an argument on the other side that says we escaped quite likely from things like the economic problems that other countries have because we were protected by things like the exchange control. So, but regulation, any form of regulation, whether it be labor law or exchange control, they all do play into the ability of companies making money and for investors to want to invest in South Africa. So before I hand over for last questions, I just want to ask the Prof whether you believe exchange controls is a hindrance for economic growth for the next few years or not.
Etienne, let me start with an apology. I do not have to sit on a bench after this, but I do have to address the Tshwane mayoral budget symposium. Yeah. Okay. So after this question, if I may please
wrap up.
Be excused, I'm very, very sorry. Okay. I do live in Tshwane and I do pay taxes there, so I do want to have a marginal influence, if then only at municipal level. In my view, we should take the bold step and abolish exchange control. For probably 97% of South Africans, we in any case do not have exchange control. You can invest 10 million rands a year offshore. Very few people can invest 10 million rands once offshore. So effectively for 97%, we do not have exchange control. But where we have exchange control, the appliance is very expensive. And let me hasten to add, we've had draconian exchange control since 1961. About 10 years ago, we had the voluntary disclosure system in terms of the exchange control amnesty and related tax amnesty. I was the chief operations officer of that system. My good friend, today Judge Matlanga, then Advocate Mbuyisile Matlanga, was the chief executive officer. It was a huge thing. We expected 1,000 applications. We got 43,000 applications. We had 43 billion rands disclosed. We raised 3 billion rands in levy. Please, these are 10 years ago, 12 years ago values. So we had draconian exchange control. It simply didn't work. It was a hindrance. Exchange control as we have it today increase the cost of capital. We should get rid of it. If we get rid of it, we have the potential of the rand becoming the currency of choice in SADC. And if the rand can become the currency of choice in SADC, we will have immense trade benefits from that, from our regional partners in SADC. So exchange control is also a hindrance of the rand becoming important regional currency. So in short, I'm in favor of abolition. Ladies and gentlemen, thank you very much for the invitation. I really have to apologize that I have to rush off. I thought we would be done by about 10:30 and I planned my diary accordingly. I know that we